Hello, and welcome to another episode of the Truth About Real Estate Investing Show. My name is Urban Cito, and I trust everyone is out there enjoying the lovely spring weather. Fun useless fact of the day, Denmark is slowing down their vaccine rollout because apparently they have COVID under control, which is fantastic news for them. Statistically, I can verify that they've got COVID pretty much under control, and that's fantastic news for what is probably hopefully here to come as well. COVID's less of a concern. It seems to be seasonal. I'm not a doctor, folks. Please listen to your doctor, not me. Anyways, but all positive news. I'm still planning on getting boosted in the fall. I have too many friends who've had bad symptoms multiple days in bed. I have a low tolerance for suffering personally, so that's my risk tolerance. Everyone else has their own risk tolerance. I just can't stand being stuck in bed sick. I have too many things to do. Anyways, I trust everyone's enjoying this lovely spring weather. I was lucky enough to get in a round of golf with some buddies, my first round of the season. Unfortunately, it was pretty darn cold. And I'll use that as an excuse why I didn't play great. I shot a 118, but I was much improved over my 12 months ago score at the same course, where I shot a 130 for my first round of the season. Yeah, my putting was garbage, and I swing way too hard. I swing too hard and I lose control. That's actually a good analogy for real estate. A lot of these companies and individuals who are not having a good time investing in real estate, I've mentioned some of them on the show. Oftentimes, it's not because they're bad people. It's just they swung for the fences without having a good foundation in place. Anyways, golf prices are also a victim of inflation, like many things. The posted rate at my golf course is the price to the public is up around 30% higher than last year, which I know is upsetting to many people. And I also heard that the cost that they're paying for a bag of fertilizer used by the golf course went up from $38 last year to $71 last year. So this year, from $38 last year to $71 this year. That's an increase of 87%. And I think we all know that fertilizers are used more for more than growing grass on golf courses. They're used to grow food as well. And sadly, I think we know where food prices will be heading. Since fertilizer is used for growing food too. One thing that's not going up in price right now is real estate. And as predicted here, I believe I shared it on this show, and I shared it at our real estate meetups, the Island Real Estate Meetups hosted by Cherry and I. I predicted this coming. We advised our clients that they're planning to sell within the next year. They should be selling early in the year ahead of the interest rate increases, and some of them did and did really well for it. Obviously, they're over the moon, having picked the peak. So congratulations to them. Very happy for them. Actually, one of them just told me on the weekend at our most recent IWIN meeting that they're handing in the resignation this week. It's time for their retirement, and we've discussed it. This would not be possible without investing in real estate. So, yeah, maybe the lesson would be, if you want to have an early, comfortable retirement, consider investing in real estate. That's just me. Anyways, not all real estate. Sorry. A lot of real estate is coming down in prices. We're seeing prices down 5-10%. It could go down even more. Some see that as a bad thing. Not our client last week, as we scored a detached bungalow for under $700,000 in Brantford. Zoning and bylaw allows for a basement apartment. And the early quote for converting the existing garage, to a self-contained apartment was well under 100,000. The early number was like 70. So our client can be all in for hopefully under 900,000 for what will be a triplex. Early estimated rent would be around $5,200 per month. Plus, we have a lender who will provide the construction loan for the renovations. This is all bleeding edge, folks. This will probably be only the second in all of Brantford that will execute with like this, with a garden suite and a construction loan. So this is something that we're staying on top of. I do believe that garden suites, which would be an addition or a tiny home on the same existing property will basically be the last opportunity for a major value add renovation to a property. So hence you can appreciate that we're all over this strategy and to knowing everything we possibly can. Anyways, 2 months ago, we may have needed to pay easily 5 or 10% more for the same property, while also competing against a ridiculous number of offers. Because I guess most of you should understand the opportunity here. It's not that common. So yeah, our client jumped on it. Thankfully, we're in a bit of a dip right now, and because of that, we were able to compete against less properties. And actually, before I go on, our keynote talk for the May Island Real Estate Meetup, hosted by Cherry and I, is all to do about garden suiting. So again, that's an addition or a tiny home built on an existing investment property, typically in the backyard. We're talking about the ins and outs of it at the May Island meeting, so you probably want to be attending that at our live and in-person meetings again. So we're only doing live and in-person. There is no Zoom or recording option. It's a lot easier that way for us. So how awesome is that? While there's some people are out there panicking about interest rates and falling right prices, historically, again, I notice a lot of people have trouble zooming out. Not for all of you, because you're all educated folks who are smart. If you can zoom out, and you will see that rates right now are historically still really cheap, and our clients will gladly use this cheap money to create some serious cash flow. And who doesn't want more cash flow in an inflationary environment? My gas, the cost to pump gas is just ridiculous. And I think, and on my wet drive in today, I think gas was approaching $1.90. Our Tesla cannot get here fast enough. It's funny enough that people keep asking me when the Tesla's coming. Our current ETA is July. It just keeps bouncing around. We were supposed to have it this month or in the next few weeks, but we got pushed out to July somehow. Anyways, technically everyone should want more of a cash flow in their lives. It just makes complete sense. Also, on the other hand, real estate is pretty much the perfect hedge against inflation, preferably on ground. On ground is best. And if you do follow the stock market like I do, all the best dividend paying companies are trading at all-time highs. So the market is buying companies that cash flow, right? Quick side note, thank goodness we own some of these companies. It makes shopping, for example, at Costco a little less painful, knowing that we own a slice of their business excellence. Not advice, folks. Anyways, I hope everyone out there has their finances in order, which I mean like their mortgage capability in order to go deal shopping, because that's exactly what Sherry and I are doing. On to this week's show. Today we have an old friend of mine, Moe Hansrod, who's been in real estate since the early 2000s as both an investor and a property manager. Moe is currently one of the owners of KW Property Management. KW stands for Kitchener-Waterloo, not Keller Williams, with around 2,000 doors under management. That includes 600 clients, mostly single-family homes, with the average investor client owning 3 to 5 houses. Moe is on the show today to share some truths about real estate investing. Hopefully I don't get in trouble for this, but he's going to be sharing some of his experiences, having to pick up the pieces after what some out-of-the-town realtors promised to investors in terms of overinflated tenant profiles and rents by as much as 25%. So it's not me saying bad things about realtors, it's Moe. So please, yes, blame Moe. Moe is also an investor in a startup company called RealMe Property, a startup real estate financial technology company offering blockchain-based affordable investing opportunities in cash-flowing real estate. Moe's young friends are here with us today, Akshat and Rishard, who are super bright. I don't need to tell you that. You'll realize that quickly when you hear them talk about their experience and their education. These gentlemen are going places, and they're here today to explain what is a fractional ownership, what is their business, which surrounds fractional ownership of real estate investment opportunities. As always, anything said on this podcast is for educational, maybe entertainment purposes, and it's not endorsement of any investment, no matter what. I'm licensed to talk about real estate, and that's it. For investment advice, please seek professional advice from a financial advisor, which is not me, nor my guests. My unprofessional opinion, I'm excited to see where RealMe goes, as I'm sure many of you would like an opportunity for potentially an early exit of a portion of our investment properties one day, while offering opportunity to those with smaller amounts of capital to invest, because everyone needs exposure to hard assets. If you don't know what that means, please read Ray Dalio's Principles of Investing in the Changing World Order. I'm not going to post that here because the book is honestly like 1.5 inches thick. Please enjoy the show. Gentlemen, Moe, Akshat, hi, what's keeping you guys busy these days?
Real estate.
Differently though for you two.
Yes, differently for us too.
Because we have a bit of a generational difference here, don't we?
Yeah.
Sorry, Akshat, how old are you?
I'm 25.
Oh, gee, okay.
Yeah, he's half our age.
You can't own any real estate. You're too young.
Yeah, exactly.
Because Moe bought it all.
Yeah, and that's why we're here, right? So, I actually met one of the people on his team online, actually Facebook, and that's how I got connected with them. So, I can start to tell you what I do, how I know you. You and I go back about a decade at Rain, probably more.
I joined in 2008. What
yeah.
You've been in real estate longer.
Probably
than me.
9, but I didn't get into later, right? But I mean, I remember you had the Tiger Cats jersey. You'd wear it all the time, so he would call himself Mr. Hamilton. And anytime I say I'm going to meet Erwin or talk to Erwin, if somebody knows Rain or knows real estate, I say, Mr. Hamilton, the guy. Oh, him. Okay, yeah. Okay. So we've been, part of Rain, acquaintances, and we talk online here and there. And I was I would attend with a few, landlords and a realtor team. And, we picked up a lot of business from Rain. It was great. Stopped going probably about say like 14, 15 when things changed.
When ownership changed.
Yeah. So we're still landlords. We're still investors.
But you're still a landlord? Did you hear the market's slowing or something?
No. You know what? It's
the Liberal government has some new plans for I don't know, whatever.
Yeah. Oh, they're gonna try to slow us down, but Tiger's not gonna change its stripes, right? So. I'm part of KW Property Management. I had my own company, Tri-City Rentals. I met a girl named Trish Montag, and she ended up taking over my company. And I do the intake, new client sales leads for KW Property Management. And we're out of Kitchener, and we service about 75 to 100 kilometer radius outside of Cambridge, Kitchener, Waterloo. Actually expanding into Hamilton and Milton now, and some into Brampton, and we're in Woodstock, Brantford, Paris, Fergus, Ayr, Trumbo, all those smaller towns outside of KWC, as we call it.
You made up some cities there, I think, but
yeah,
okay.
they're smaller.
We'll let it slide.
If you live down there, you'd know them, right? So, but we're up to about 2,000 doors, mostly single-family residential. The majority of our clients have 1 to 3 doors. A lot of our clients are working abroad and don't want to sell their homes because they're unsure of what the future holds, and they don't want to be chasing the market, obviously, which has taken off down here, in KWC anyways, and in Southern Ontario in general. So we look after it for them. We, fill the units, collect rent, do the evictions if necessary, and your regular property management shop. So we have an office downtown.
Well, regular means different things to many people. Yeah. This sounds pretty end to end.
Yes, end to end. Yeah, so it's a full shop, full hands off. We got clients all over the world. A lot of clients we've never met before. They buy property here. We, as long as you have a Canadian bank account and FinTrack, you're above board. We can deal with you, right. And so we make it hands off for our clients. We do everything from placing the tenant, dealing with them day to day, to cleaning, to doing their banking. To doing their licensing if the town requires it, etc. And we have a staff of 15 downtown Kitchener where our office is, and we do some commercial stuff. Like warehouses, medical plazas, strip plazas. We even look after shuttered McDonald's. So if McDonald's closed a restaurant down within about 75-kilometer radius of our downtown office, we'll look after it for them. Right now, we're looking after one for them beside Google, downtown Kitchener. So they're still undecided what they're doing with that piece of land because it's very valuable now. So they're one of our clients. But our main focus is single-family residential, and to a lesser degree, we have about 5%, 7% of our portfolio is student housing. But it's a lot more work. We'd rather stay with single family. And I've found it as a landlord myself just to be a better business, less turnover, less wear and tear, less dealing with students' parents yelling and screaming about something, and children fighting, etc. Right? So that's basically what we do, who we are, and what I'm into. And I've always been into real estate, investing, stock market. Now I'm into crypto, and I know Erwin is into all these things as well.
I like making money.
Yeah, exactly. And
we're not hurting nobody.
Yeah, exactly. And I attended his seminar with Grant Cardone pre-COVID, and that was great. And that being said, it's sometimes, I like to dabble in other things. So I met Amna from Akshat and Rishard's team of RealMe Property, and they will explain what they're up to. And I've joined their team as a consultant advisor / acquisition guy, and going to help them grow out what they're trying to achieve. And we've already acquired a couple of properties out of town. One's in Kirkland Lake. And
actually, hang on, I'm just going to pause you right there. How long have you been in real estate? I'm still trying to qualify you as an expert. I'm not sure we're there yet.
I've actually, my first property I bought was in 89, 90.
Okay. Longer than you two gentlemen are alive,
yeah,
right?
Of course.
Yeah, okay.
So
okay.
fresh out of high school.
Okay. And then, and then how long have you been in property management? You mentioned it before.
Early 2000s, and then I've been with this particular company, KW Property Management, who took over my business, which was self-run. I was running it out of my house. We merged in about 2011, 2012. And
Mo was a startup guy, huh?
Yeah, we've been going strong since, and we've grown the portfolio from about, like I said, about 150 doors combined to over 2,000, and about 600 clients, close to 600 from all over the world. So it's we got a niche market down there. We have a lot of people that come to us for help, advice, consulting, and try to help facilitate transactions for realtors that may want some assistance for their clients. So we're a full service shop. We do some leasing agent stuff as well, where some people want to be hands off and want us to manage their properties. Just fill their properties and not manage. So, it's all over the map. Sometimes we'll get clients, they'll be living in the basement of a triplex and want us to manage the 2 upper units and don't want the tenant to know that they're the owner.
Got it.
And sometimes I'll get a call from China, fill my unit and email me the lease, and I'll deal with the tenant directly, and I don't need management. And they're halfway across the world, different time zones. So it's all over the map. You'd think the person in China would want the property management, and the guy living in the basement of the triplex would manage on his own. But it's complete opposite sometimes.
You've seen it all then.
Yeah. And we have a mix of business coming in. We have business going out, obviously, because of the sales market's been on fire. So people that have been long-term clients are cashing out. But then again, I was telling these guys earlier, people that have bought properties, say back around Christmas, have seen substantial gains in their investments and are cashing out 6 to 8 weeks later in some instances. So it is what it is.
But that's not the norm.
No, that's not the norm. That's not the norm at all.
So I'd actually like to ask some normal questions. Yeah. Didn't come out right. And so here's my question. Because, again, the show's called about truth about real estate investing. So, and the nice thing I like about when gentlemen like yourself, you have access to a wide database essentially.
Yep.
How many of your clients are full-time and you call full-time investors?
Full-time investor.
As a percentage. You mentioned earlier your average client has like 3 to 5 properties.
I would say 75% of our client base is probably investors, and about 25% are working abroad or out of town, and are just using our services to keep their unit rented, cash flow, make some money while they're either deciding whether they're going to come back or they're going to sell the property at a later date. So I mean, some don't want to be landlords. It's just something that's has been thrust upon them because of job change or something like that. But yeah, it's kind of all over the map. And as I was saying, I do the client intake, and half of it's talking to new investors, first-time buyers, and half the business these days seems to be people that have went and did it on their own. DIY landlords got themselves into trouble, have delinquent tenants. It's all over the map. So
Mo, this sounds like regular people. This doesn't sound like foreign buyers or like
mega
multinationals.
You know what? Like, there isn't like massive foreign buyers showing up. They are there, but I would say the majority of our portfolio are Canadian citizens, even if they're living abroad. So they've bought these properties when they were here and moved abroad. I mean, I do have the calls once in a while from the Middle East, Latin America, Europe, California, China, or wherever in Asia, where they want to invest here, and Vancouver and Toronto are at a range now, and so they've set their sights on KWC or other parts of Southern Ontario. So yeah, I mean, if we can, get them to buy, obviously it's business for us, and whoever our realtors are that we're dealing with at the time, and they're looking at all sorts of places in Southern Ontario. So they're looking at London. We really don't go down there; it's a little bit far. We'll help a few clients that are good clients. If they really want us to, travel that far, we'll do it for them if they have multiple units.
But
I noticed
foreign buyers isn't really.
Yeah, foreign buyers. I think Vancouver.
I just bring it up because they're now banned. Apparently.
Yes. I mean, they're banned. So we'll see how long this lasts. See if it makes any difference. I think the government's going to find out quickly that there's.
It's just noise.
Yeah, exactly. And,
which is surprising because it made headlines.
Yeah. Yeah,
if that's what you're going to talk about in the budget, there's much more important things in the budget.
I think the big thing they're going to realize, and if they asked anybody that was in real estate what the real problem is, it's their policies, obviously, the as far as Ontario government, provincial LTB guidelines, etc., and a shortfall in new housing. And I just, as I was saying earlier, I just don't think there's enough labor to keep up to demand, and kids these days aren't getting into bricklaying, framing, all the things that are needed because they're getting into, computer sciences, etc.
They're used to the comforts of
not
what their parents have done. For them.
Exactly, and they're not prone to physical labor, and I think there's going to be a shortfall there. And I know the government has said they want to build, I believe, 400,000 new units in the next few years. To I just don't think it'll be enough, and I just don't think they'll reach that number.
Okay.
So
all right, Mo, I know you want to talk about other things, but I need to get one of these bad realtor stories.
Oh yeah. So
can you tell me about the bus tour?
Yeah.
Outside of Google.
Yeah, I was telling Erwin earlier that So, I mean, a thing I've been dealing with lately is a lot.
Lately.
This
seems like forever.
Well, that's for the last few years.
Okay.
Where we're noticing because of the Toronto prices, investor money, like especially investors that are refining to take that money and put it to work in Toronto just won't work. And so they come down the highway to Guelph. Guelph is getting out of control. So they'll come down to Cambridge, Kitchener, Waterloo, and, they'll think, I was.
So they're area experts now?
Yeah. Well, we're getting realtors that, think they know the area, Meanwhile, they've probably been here once, just
right.
drove through town.
They know Toronto very well. Now they know Guelph really well. But now they know Cambridge really well. Got it.
Yeah,
Right.
exactly,
Continue.
exactly. And some of these realtors are over promising and under delivering. So they're bringing their yes, believe it or not, and they're bringing their clients down, and they're telling them, pie in the sky stories of outrageous rents at low prices as far as like units they're acquiring, and when by the time they get to me, I have to temper their expectations, so to speak. And we this is a common thread, and I'm seeing a lot of realtors come down here, and they know that at the end of the day, once they get the sale, they can move on. And if they find a property manager like me or somebody else, then the issue is then foisted upon myself or the other property manager to deal with. And like I said, there's sky high expectations coming from these landlords. I was telling Erwin a story of some Asian investors coming down with clipboards on a tour bus, like the same that would go to Casino-Rama, etc. And
different type of gambling. Okay.
Yeah, different type of gambling. And
you can argue it's better.
They were coming down to look at condo projects downtown Kitchener. And one Saturday morning, I believe the realtor sold about 20 of them to these
that's a huge payday.
Investors, and then passed my number on. And when I finally spoke to some of these investors, they were under the illusion that the prices didn't align with what I was telling them the rents would actually be, because this isn't downtown Toronto. It's not Bay Street. You don't have guys from the stock exchange renting these places with six-figure salaries.
Yeah, it's not the financial capital of Canada.
Exactly.
Cambridge is not the financial capital of Canada.
Exactly. we have Toyota, which has which manufactures Lexus. Yeah. So I mean, there's some high-paying jobs there. There's Google, but there's only a few hundred people working at Google, and the majority of those people probably own their own units. So these six-figure salaries are, they just don't exist. When
these landlords aren't going to attract that tenant profile.
No, and it's a blue-collar area. Even though Waterloo has the universities, the majority of single-family, tenants aren't the same profile. So they're not white-collar. They're mostly not educated, and the average wage. Even in even if you count some of the manufacturing outside of Toyota, is still under $20 an hour. So once you figure out the cost of living, there's not much left, especially if you're...
Wait, these are landlords who put up their money. They must have done due diligence and knew this already.
No, the realtor does the due diligence, which is the problem, right? So...
I'm sure they did a really good job to take care of those clients.
Well, we do. The clients that do come on, and I can convince that, you may be underwater, but you'll make money with mortgage pay down and appreciation. They're the ones that, after a while they gain our trust, and they understand that, we weren't the ones to put them in this predicament, but we're here to help them out.
How bad was the rent delta between what they were sold and what was reality?
Anywhere between $500 to $1,000. So massive discrepancies, and the numbers just aren't working anymore unless you're getting into bigger multi-unit projects, where the cap rates may be above 4%, but just the prices have skyrocketed, and
you can't do 20 of those in a bus tour.
Yeah, and the
I wish I could.
The lending rules have tightened, and we're seeing even banks asking us for like letters of opinion. And sometimes we can't lie. Obviously, I don't want to get involved in mortgage fraud, so we have to be honest of what we can get in rent. And then you have realtors or mortgage brokers coming back and yelling, "Oh, you should have put $2,500 down for that place." I'm like,
you can.
Yeah, I was like, yeah,
you put up your license.
I said, in reality, it only fetches $1,800. And I said, even if the underwriter does due diligence, they'll figure out that my number is closer to what he's going to find. And I said, it's going to screw
they're
up.
not dumb. They run comps.
Yeah, exactly. And, but I mean, at the end of the day, this is a commission-based industry.
Yeah.
Everybody's chasing a quick buck and they'll move on to the next deal. And, especially with mortgage brokers and realtors, once their deal is done, they've been paid, they wash their hands and let a guy like me deal with the fallout. So,
and that's why I love the opinions of property managers, because they're not commission-based.
Yes.
Right.
Exactly. We have some commission based, like a structure, but I mean, the day to day, residual payments we receive, the headaches from that don't correlate actually with what somebody on the other side is being paid, as far as their outrageous commissions. And I mean, I have nothing against realtors. Some realtors are my best buddies, but I mean, their commissions have stayed the same ever since I've gotten real estate, which is, half of 5% for one end, and, house prices have, in some instances gone up like, 500 to 1,000%. But the salaries from say 30 years ago haven't gone up commensurately. So, these things don't align. And, but realtors, just because they're making a lot of money, and the biggest players in our town, in our area, aren't doctors, lawyers, engineers. They're not the, university educated. They're actually realtors, some with high school education. And they're good marketers, good salesmen, and they're making outrageous sums of money. But and
that's one of the problems of Canada.
It is what it is, right? And
this is part of the bigger problem, because all these people are making money in real estate. That doesn't really help the future of Canada, which is why I'm guessing we have these young gentlemen here who are going to save us all and pay for the bill that we've kind of racked up.
And, exactly. And it's a YouTube generation. It's social media generation, right? And, I mean, I like Gary Vee as much as the next guy, but I mean, the way he promotes things, sometimes it's like he'll say, everybody can just triple down on what they're good at and go make a ton of money and not have any education, et cetera, right? Not that I have an education myself, but I think, there's we need people in STEM, like those areas and subjects. And
who'll move us forward.
Yeah, exactly. And, if you can make, or sell something online and, use TikTok to sell it and promote it and, have a business, great, good for you. Yeah. But the majority of people are going to fail. And so, I mean, that's basically it.
All right, Mo, I think we've qualified you as an expert on real estate. So hopefully you vetted these guys.
Yes.
These young people.
I'll let them talk now.
Akshat, Rishard, what are we talking about today?
I mean, Mo covered his side of the story. We met Mo through a social media group, got connected, and, now looking at the other side, we always look at the older folks, the experienced folk, as not understanding technology. Yeah. And I think that's
having ruined everything for you people. Yes. You people being young people.
Not talking about Mo here. Yeah, but Mo was, one of those few people that we really like. We think he's a great consultant to the team because he brings the experience and he understands technology is something that will move us forward. And hence, that's why we're here. Myself and Rishard were both co-founders. We met in Waterloo. He is doing his PhD from University of Waterloo. I finished my degree, BBA at Laurier. This is our second startup. Just a quick background about ourselves. I was running my first startup in 2016. I started. It was in the rideshare space. So basically helping, the younger generation, let's say the college students, carpool from point A to point B. Because Uber is pretty expensive. Go buses, you have to take multiple buses, whether you're traveling downtown from Waterloo or, Waterloo to, say, East End to see your parents. So we started a carpooling platform, using technology where we connected drivers with student riders, and they just had to pay $10, $15 per seat, so it's a cheaper way for them to travel.
Okay. Did you make money on this?
So just a little story on that. In 2019, we pitched on Dragon's Den, and that was our our first go-to pitch that came out on TV, and we launched it in 2019 as well. We had around 25,000 users in that year. Myself, Rishard, and our third co-founder, we sold it to a company down in Toronto. So we got acquired in 2020, just before COVID. And then we worked with that company for, I would say, 12 to 14 months. And, myself, Rishard, and a couple of other people, we said, we like the startup space. Let's do it again. And that's where we're here, right? That's where we started RealMe. I think before we get into the solution, I think the biggest thing, I wanted to talk about is the problem we wanted to solve. People, that are fresh grads starting their families off, they have not too much knowledge about real estate. As again, Mo was talking about how there's, real estate agents. I'm not generalizing, but there's real estate agents that are good salespeople, but they don't know about the market. They don't know about the area that someone wants to buy in. You have a lot of lawyers, but again, they're not very well educated, how to cater to the younger generation. And if you look at from, someone who's 26, 27, talking to an agent or a broker, they don't even get taken seriously, because people think, us as a younger generation, we don't have enough money. We're just kicking tires, looking for houses. And that's where we wanted to come in, because we see the younger generation, the 10, 20K they have saved up, so in some cases 50, 60K when they're starting up their families. They're investing in stocks, they're investing in crypto, because it's very simple. You open up an app, you put in your KYC, know your customer details, and you can invest. Mm-hmm. We got thinking,
which is great and both scary, but yeah.
Exactly, right? But then
Dogecoin.
Yeah, exactly, right? Dogecoin, Elon does a tweet, it goes from less than a cent to 40 cents in a day, right? And the younger generation is accustomed to that kind of technology. They like everything on their phone, everything done quickly, convenience, hassle-free. And that was the biggest problem we wanted to, address, is younger generation want to invest in real estate, but it's a high switching cost. You got to put in a down payment of, let's say, 90 to 100K, get a mortgage, go through all the different aspects that the younger generation doesn't like. Yeah. And maybe they don't even have the money to do so right now because of the house prices going up. And that was the biggest problem, right? So one of the biggest things we do, even before putting up a solution, is talk to people in our target market. A lot of people, we spoke to, they want to invest in real estate, but they don't know how to. We asked a lot of people, why don't you invest in REITs? 75% of the people we spoke to, they don't even know what a REIT is. And there's a huge major gap in terms of the, the education.
That's a good point. Like you went to business school, I went to business school. Yeah. I don't think they ever mentioned a REIT to us.
Exactly.
No, like I think on a lunch and learn they mentioned real estate to us, where brokers came in.
Yeah.
But there's nothing.
Yeah, nothing on personal finance. I heard in Florida they're going to be doing that.
I still don't trust them.
Yeah.
It's funny though, it's Florida. I wonder if they'll mention Bitcoin.
Well, we'll get to the crypto piece too. I'll kind of have Rishard kind of handle our solution piece, but I think, that's the biggest piece, right? Like I think in the news I saw they're trying to put in personal finance in the grade 9 math education, but that hasn't passed yet. I saw this news 2 years ago. I know me and Rishard were talking about it. We're excited. We're like, we learned how to do taxes because, we had our family members, CPAs, we know how to manage money because of that. It wasn't because of the school education. And, that's, we got excited because we saw the government, posting something like this. But soon we understood as we are growing up and getting more experience in the field is, government will put up a lot of policies, but barely anything happens out of that. Slow. And that's why we wanted to be on the field and try to make a small change for our niche market, so that at least people within that age group, within that market, can see a small, customer gain for the solution that we're offering. So, I'll have Rishard kind of handle our solution piece.
Thanks Akshat and Moe as well. Again, if you think about the market, right, the stock market, the crypto market, it has evolved so rapidly, and that's why you have so many people adopting and coming into the market. For example, with the pandemic in the last 2 years, we've seen so many people actually coming into the stock market and the crypto market than it has ever been before. But if you look at the real estate market, and if you ask the same target group, they haven't really been exposed to the real estate market just because of the friction associated. Sure, there has been a uptake in the number of people that are coming to real estate, but these are the same people that were already in real estate, not the newer generation, not the younger generation like myself and Akshat. We still have that entry to barrier becoming higher and higher, because with time, only the down payment that you need to put in has gone up. The mortgage that the amount of income you need to qualify has gone up. So it has become harder and harder for people to, like myself and Akshat, to be a part of real estate. So we wanted to create a system that is accessible to anyone and everyone, because right now it's not. And it is a problem for us because as much as we love putting our money on stocks and crypto, like you said, it's
not diversified.
It's not diversified. And then also it's dependent, still it's in early stages, especially crypto, whatnot. It can be manipulated easily. Like you try putting your money into some coin that was launched a couple of days ago, hoping you make 100x, 1000x, like the people who
in a
did
month.
Bit.
It's
Exactly.
crazy. Yeah.
And if you really ask, when we did our customer discovery, when we talked to a lot of people, we went to malls, we basically gave away Christmas gifts, talking to people, understanding their pain points. We went to skating rinks, giving away free hot chocolates, trying to understand their pain point. Two different audience, right? Especially the younger generation. No one knew about REITs. Everyone has forgotten about owning a house, most of the people, at least for the next 10, 15 years, because they can get into it. Exactly. But they still know the gains associated with real estate. They're like, hey, my parents own a house, they're looking for another house, whatnot. So they know the importance of getting into real estate at a younger age. And they also understand there's one friend out of their entire friend group, friend circle, someone who got into real estate, now has done fairly well compared to the rest of the group.
Okay, let's just pause there. And can you hand out Mo's cell phone number so they can call Mo? Make him a friend.
Sure.
All right.
For sure. So what we did was, again, myself and Akshat just took a step back, looked at all the research we've done. How much do these people have as disposable income, right? Most of the people don't have that much as disposable income when you are young. You have bills to pay, you have debt to pay, you have student loans to pay. And if you look at the disposable income, it's always in the range of, let's say, anywhere from even $50 up until $50,000. Sure, there are some people who are outside of those lines, but most of these people fall into this category. With this category, the current real estate market doesn't really address anyone within that range. You can buy a house for $50,000 at least in Toronto nowadays, and people in our age don't think like, oh, we have to move to Calgary to buy a house. We still want to live here because this is where our family is, this is where our work is, this is where our friend circle is.
I know it's cold here, but it's colder there.
And like just to add on to Rishard's point, I was reading an article. Average gift sites from parents to their kids is $130K for a down payment.
Yeah, that's across Canada though. What is it for Vancouver, Toronto?
It's probably double that, right? Which is
I think it's close to 200 or
exactly.
And that's just what they're reporting.
That's what they're reporting, right? Right.
Remember, if it's longer than 90 days in your bank, then it's just yours, not a gift, right?
Not a gift.
So much is missed in the data that's available.
Yeah, so much that's missed. And also we look at the ones who are not privileged enough to be a part of the real estate game. And thanks to our parents, but now we are privileged enough in a way to be a part of real estate, in the real estate game. But user research just talking to people showed us how many these younger people are actually underprivileged and cannot be a part of the real estate game for the next 10-15 years. And this was a problem for us. And us being the younger generation, we wanted to solve it from
hang on. You actually think they'll be able to get in 10-15 years from now? I don't know.
I'll let Mo handle that question.
How can you save fast enough to keep up with the market?
I think it's not saving, it's investing.
Exactly.
And it's diversifying
Okay.
yourself.
So if you do the right things.
Exactly.
Oh my. That sounds...
Because it's honestly about financial literacy, right? From day one, like imagine being 18. You know, my dad is a CPA. He's like, Akshat, let's get a credit card. Let's build your credit history. I had no clue what a credit history meant because high school doesn't teach me that, right? Okay. And having the privilege, as Rishard said, right? Our families were privileged enough, right? These guys are CPAs. These guys are business people. They know steps, right? They have a RRSP fund for us. Everything was set up, but around us and being in a target market where a lot of people weren't, we could see the problem. We could feel the problem. Even us buying, there's a story, us buying like the first house, it was a huge issue because we were on our own. Yeah, we got the help from our family, but it was a difficult, process because we had no clue how to buy a house. Yeah. We are second time tech startup founders. We have a lot of being like, this is easy. But as soon as you get in the real estate market, it's difficult because it's your major purchase that you're doing. In a tech stock, you're investing maybe $5,000, $10,000. In real estate, you're investing $100,000.
Yeah.
And if you have no
and you're
clue-
tied to a mortgage.
Yeah.
Exactly.
So
Right.
it's a big commitment.
Yep.
Yeah. So that, like Akshat said again, that is where we ended up being. We had a roadblock. Okay, there's no solution. It's just like, okay, you basically put your money in a random coin and hope it goes up by 10x, 100x in the next 10 years, and maybe still I'll have a chance at real estate, right?
I mean, as far as like financial literacy, like a lot of our clients are white collar, very educated, but some of them come in with no concept of, how to invest or anything, and
Sorry, who are these? Tenants?
no landlords. I mean, some of our clients are doctors, lawyers, engineers, smart people. But I mean, the basic concept, of landlording elude them. And, sometimes it's like, we deal with people all the time, and sometimes it's the ones that that are the smartest that outwit themselves,
Oh, yeah.
right? And
I've had
overthink
that
things.
happen.
And I think you told me your dad's a doctor too, right?
Yeah.
So I mean, I don't know if you got
He's
him.
different.
Yeah.
He understands a lot more of the
Yeah.
problems and why we need to invest. Yeah. he's
Yeah.
different.
So, and you're a father. You got a couple kids, but I mean, I'm sure that this is going to take priority, and your kids are going to know this stuff growing up, and
We've already had discussions with our kids. So first off, my kids are 8 and 6. We've already had discussions with them about what money is
Wow.
and what fiat currency is.
Because I remember when I was 8, I know from mine and Rishard that we were outside just playing with our neighbors. That was our only
That was
thing we were
COVID, so
doing.
you can't go.
Yeah.
You can't see other people.
so his children will be the rare circumstance where they'll either figure out a way to buy their first property or investment property.
They already have their properties.
So he's already got it set up. I didn't want to say that. He's probably already got them set up.
The funny part is I was talking to someone else yesterday, and then he's into real estate investment as well. And he said, I've already gotten the properties for my kids, but they won't know until they get married. I will surprise them with the gift, because I know for a fact they won't be able to afford a house when they get married.
Yeah.
I'm like, wow. So it's you have to plan now if you're privileged enough so that you can help your kids maybe in 20 years.
Yeah, I mean, they're already SOL. The majority of them coming out of school, mired in debt, and nobody to guide them, right?
Yeah.
So this is going to be a common theme going forward.
Mm-hmm.
Yeah,
And we can blame whoever we want, but from my experience, second generation investors are much better than first generation investors. So who can we assign the praise for that, right? Their parents.
The parents,
Yeah.
Right?
100%.
Like Mo, you've seen this. You've seen second generation investors and how much better off they are.
Yeah.
Second generation anything. Second
Anything,
generation
yeah.
cop, doctor, teacher, anything.
Yeah.
Right? You're probably better than your parents were when they started.
Yes.
No,
Right,
they
so we
struggled
can blame
for
whoever we
us,
want.
100%.
Yeah. I mean, there's lots of blame to go around, right?
But we know what the path of success though.
Yeah.
Yeah. So even going back to left off, even with, let's say, in our case, we had money saved up and had some help from parents and family too, and still then you look at all the debt to income ratio. All of us are like, we have OSAP debt, and we have a car that's leased out, and you add all that up, you still can't get into real estate market even if you have the down payment.
Yeah.
Even if you're making good money we are both in the IT field too. And
Wait, I had both those things and I had a girlfriend. All right, continue.
yes,
So I have net less money than you guys do. So please continue.
well, so it's hard. Even if you have the money, you still don't have an entry point, especially in the generation that we are targeting. That's when we decided together to come build a solution that can cater the entire younger audience, and it doesn't stop from at the younger generation. It caters towards the entire population. Like you said, Mo, there's a lot of these folks who are really smart, who are doctors, engineers, who still don't have that literacy enough to make that right choice. Yeah. And
a lot of people want an easier solution.
Exactly, an easier solution, because with the day and time today, people are used to more of tap done. It's even the checkout process, everything is becoming so much simpler that you take away so much friction. But real estate is one of the biggest sectors in the world, but has remained the same ever since. You've gotten to the point, sure, the prices are increasing, but the technology associated with it has stayed the same.
Yeah, it's pretty bad.
Pretty bad.
Yeah.
And it was outrageous. That's when we decided to build the system where you can buy fractions of a house. We looked at Bitcoin, we looked at stocks, we looked at what Wealthsimple is doing now. You can buy a fraction of a stock, you can buy a fraction of a Bitcoin, you can buy fractions of crypto. But can you buy fractions of houses? No.
It needs to happen.
Mm-hmm.
That's when we saw an opportunity, and the need was confirmed by talking to people. We need to build this from ground up. We basically said, hey, we buy a house, we divide it into $50 units. You can now invest anywhere from 50 to 50,000, whatever the number that person wants to. Now you are a part of the real estate game.
Right. Wait, so are you guys capping it?
There's a cap just to make sure. I mean, Rishard will go into more of the governance piece as well.
But not for me, right? I'm not
You're
capped.
accredited.
Yeah, so I'm not captain, right?
Yeah.
All right, sweet. All right, go.
Anyone who's already in the real estate market, I'm sure you are most likely than not an accredited investor.
Yeah, because I mean, you have two properties. It's worth more than $3 million. Your equity
there you
is there.
go.
You're
Your
good.
equity is there, then you're good. There's no limit when it comes to that if you are an accredited. But then, sure, we still do have to play by the book. We need to ensure that we are looking at your risk ratio, and we are giving them advice through our partners to tell them this is how much you can invest safely in this, so that they're not just taking a random bet on the real estate market.
Mm-hmm.
We are also still mitigating the risk through all these other partners that we've for example, like Moe comes with so much experience. We want him to advise. We want him to tell us. We want him to tell me how much should I invest in this particular property. I want to diversify my portfolio as well. For example, we looked at REITs, right? When it comes to a REIT, you're putting the money on the entire portfolio that they have. But I personally prefer putting my money in each house.
Because you look at commercial REITs right now, last 5 years, most of them are actually losing 8% over the last 5 years, which is a crazy stat. I know COVID is a anomaly where, REITs, all commercial REITs went down because there's
especially
no
office space. Yeah.
But the as Rishard talked about, a lot of people obviously first don't even know about REITs, but when they look at the returns, the younger generations, used to 40-50% return in crypto. Imagine showing them REITs. They're like, no, what the hell? Right? And that's where using individual real estate and, providing them a actual house.
Mm-hmm.
Hey, invest $1,000 into this. And, we're going to maybe finance, maybe cash, whatever that is. You're leveraging your debt as well. If the market goes up by 10%,
Mm-hmm.
you're probably making 22 back, depending on how you're leveraging your debt.
Mm-hmm.
And that was the case, right? A lot of folks within the target market wanted to be part of individual fractional ownership.
Right. Actually, you just mentioned something. I just want to highlight it. A lot of people don't understand our returns are so high because we're so leveraged.
Exactly.
Exactly.
Like you put down 20%, for example, and then your returns are basically, if property goes up 3%.
Yeah. Your cash on cash is great, even if the market is going up 10-15%.
And the part being is that a lot of younger generation, they look at this news, right? All that, and then they are like, okay, it's 23%. 23% doesn't really mean much to me when I'm making maybe 20% over 4 months. But they don't see the leverage piece, because you're putting 10% down. Let's say you put 10% down, 90% leverage, and then you're 9 times whatever the profit that you're making. So if it is 10%, you're making 90% on your down payment.
And that's just an example. We're not. Are you guys actually finding lending for this? 90% loan value?
And people, I get younger generation, they'll, talk about crypto and stocks, and, you can't get a mortgage for that stuff. You can get a line of credit for whatever you want to do, but
they won't lend you money for it.
Mortgages, it's, you can't beat it, right? I explain to people bad debt, good debt, etc., right? And okay, what are you going to do in 10 years? You're going to cash out everything and sit there and go, I'll just stay in debt.
Mm-hmm.
The more debt you have, the more you'll make, right?
Mm-hmm.
and they don't seem to get that, right? And I said, explain to people that, how does this person buy 30 properties? Well, they go further into debt. I said, I tell them, these properties, they appreciate, the mortgage gets paid down, and, their equity increases, they'll go back to the bank and, borrow, even more money. And I said, go buy it and then, rinse and repeat. It's a common, formula, and that's just how it works. And, the people that do realize that leverage is everything in this game, they'll do better than the person that doesn't.
And this isn't financial advice.
Yeah.
No, and it's
and
not
just a
financial
quick
advice.
example, like I know so many of my friends, they're like 26, 25, 2 years after university. They have money sitting in their savings account, right? 30, 40K, because they're working jobs. Let's say they're making 80, 90K in Toronto. They have money saved up, but they're putting it just in their savings. They're maybe putting some in stocks, some in crypto, but most of their holding is in savings. Because they think saving the money, they don't think what inflation means, right? Last year's inflation was what, 8-9%?
5.7.
Something crazy. And for them, and another example, right? For them, they see a OSAP bill, 30K. I can tell you like 80% of my graduating class would pay that 30K right away if they have money sitting, because they don't like debt.
I'd wait that out as long as I could.
Right? When you look at the interest rate right now till 24, the government's doing on OSAP, it's close to 1%. You're paying less
You can
than
borrow for 1%.
Exactly. That's the basis of understanding from financially.
Oh my God. I go lend it to
what is a
Moe.
good thing?
Moe, give me 5%.
Yeah, exactly. Then I'll turn around
I'll let the money go.
12 or 14 from somebody else, right? So,
Again, this is terrible financial
Yeah,
advice.
Yeah, for sure, yeah.
Gentlemen, can we please let's go back to the investment though. What is the investment? What is the underlying? Because if the underlying is good, that protects the investment, right? Because we've seen epic fails of not very good investments. So please, what is the investment?
So
Is it metaverse? Is it Park Place in metaverse?
Well, it'll be actual real estate,
okay.
brick and mortar, right?
Okay.
Where someone's not going to wake up and decide to sell it right away, right? So, we're going to do a mix of different things, see what works. Right now it's, even though myself, we're in KWC, our company's in KWC, I would prefer if we bought these properties that we're going to be getting funding for down our way, but the numbers just unfortunately don't work with how prices have skyrocketed. So our first couple of investments have been out of town, and one's in Kirkland Lake, the home of Alan Thicke, and found a property. And Elizabeth Kelly, I think you know her. She, her husband runs a property management company up there, so they're helping us. We got a great deal. It's a lower end unit, but I mean the numbers are terrific for what we're trying to do. And what would be a down payment here, you can buy the whole unit up there. And then we picked up a duplex in that one in Kirkland Lake is a fourplex. The duplex that we got off market is in Peterborough, and we're looking to eventually move the current tenants out after their school term, and raise students and raise the rent. I think they're going to Sir Stamford for school. And the other unit is vacant. We're going to be doing some work on that one and try to get top dollar for both units come Christmas, because that's when that term ends, and have a nice cash flowing property that we can either flip for a profit or cash flow and hold long term and see what the appreciation's like between 2 and 5 years. So depending on the situation, it's gonna determine what we do with these properties, right? Might be buy and hold. It will be the majority of what we do. But I mean, if the market dictates a flip scenario and the money's there to be made, that's how we'll go about it, right? And hopefully these smaller investors can enjoy these types of return, and it'll be a little, it'll be a lot safer than crypto. Safer than the stock market.
It's a real underlying.
Yeah.
It's a real physical asset.
Yeah, exactly. The underlying asset is stable, and you can't get a better market than Southern Ontario. And as I was alluding to earlier, yeah, Vancouver and Toronto are basically, out of most people's range. And, so they're looking at other parts of Southern Ontario, and we're right in that area. And I think there's lots of room to run. So I think the next 5 years is when you'll see another big leg up, massive gains. And I think people look back on this time like slightly post-COVID, if you can call it that, where they'll say, you know what, the war is going on, rate hikes are coming. This is actually a good chance to buy because,
These are temporary.
Yeah, this is just going to be before the next run up. And, even in the last 6 to 8 weeks, because we're talking in early April of 22 now, with the difference between end of January, early February to now, we haven't seen the amount of bidding wars that were going on. Slowly, conditions and inspections have come back on some properties, especially where we are.
Yeah, we're doing the same thing. Yeah.
And, but I mean, I think this will be short-lived. I don't think home inspectors should get too cozy because it'll go back to the craziest soon enough. So, that's basically what we're doing, and that's where I'm trying to help these guys. And
Right.
They're obviously taking care of the tech portion and the platform, and they have some great developers. And NFTs will also be a part of it. I have no idea how they really work. I just keep hearing it, and I'm trying to figure it out. But it's one of those things that, like crypto, I still understand the basic concept, but it's hard to wrap your head around.
Well, security.
So yeah.
It's internet security.
Yeah, blockchain. I mean, I don't know what these guys have planned as far as the technical aspect, but they're bright guys, and I believe they'll have a solution that works. And it'll be different than someone like Addy, where they're looking for, I believe, minimum 2,500.
No, dollar.
Oh, dollar? Is it a dollar?
Just
Oh,
maximum is
1,500. 1,500. Okay.
Yeah,
1,500.
they have a holding period, I think,
Yeah.
for 5 years.
Okay.
You have to hold
Yeah,
that money.
folks, we love Addy. We're
Yeah, for sure.
feel free to I'm not positive. I'm not sure what the cap is. 1,500.
Yeah,
Well, I thought it was 2,500. That's where I got the number, but I thought it was Credit Investor. I know there's another platform out there. I
they're
believe
coming out.
it's Willow, and they have a little bit of a different structure. But this one should be a lot easier for junior investors to migrate, and it'll be more along the lines of something like Wealthsimple.
And then, so is there? How do you, how do you describe the investment? Is it a DAO? Is this blockchain based?
So it will be tokenized essentially. So just to kind of go into a background about NFTs, right? The last couple of years, because of COVID, everyone's on their computers, and Facebook changing their name to Metaverse, and everyone going into buying land on a server, right? All the influencers are putting their own tokens out, right? You look at the Nelk Boys, right? They had a huge token offering for a lot of their followers. They raised $4 million, and the tokens are nothing. Tokens just provide, hey, the Nelk Boys minted a token on a network and giving it to, let's say, Rishard and me. What this token holds is, let's say, they get some free merch, maybe they get, like, say, meetups, exclusive meetups in Toronto, exclusive meetups everywhere. That's what the token means for the influencers.
More like a membership card.
Exactly, from a digital standpoint. How we are looking to use NFTs and combining it with real estate is, when we buy real estate, we put it under a smart contract. So when we mint tokens, let's say we're using Ethereum's blockchain to mint get a smart contract together and mint a token through that, what we're doing is we're making a set amount of tokens that are worth set amount of value for the real estate that we have on our platform. So now we are basically using digital contracts in order to give you a token, give Rishard a token, give Moe a token, give myself a token. And when you hold this token, you'll get obviously rental income. And when you want to trade it in, we look at appreciation even before the house is sold to give you the appreciated value of a token. How real estate right now it's done is, I buy a house, I get investors, I sell the house, I give you the profits. But why can't we change it how stocks are? right? Real estate always is appreciating, right?
Well, not always, but
yeah,
depends on where.
Long-term outlook, right? You're looking at, let's say, from 2000 to 2019, it's in Ontario, it's gone up 8 to 10%.
Right. Ontario's been a gift.
Yeah,
not all places have performed the same.
But
sorry, Alberta.
Yeah, you look at from being a safer investment and a long-term outlook. But if you have tokenization and give tokens to, let's say, 100 people, and you provide them appreciation if they want to trade it in when they need the money, it's a better angle for them to get into real estate on day one and try it out for themselves, right? And by providing them tokenization, you can also provide governance. As you talked about DAO, we're not there yet, but what we're doing is providing individual decision making. Let's say we have a house in Kirkland Lake, fourplex, we want to sell it. We can, send out a quick update on our application. Hey, what do you want to do? So once we have a majority vote, we can sell it. So we're providing a vehicle, right? As a technology platform, what we want to get into the future is homeowners can list their homes. We're not going to charge them 5% of the home value. So there's a huge positive advantage for them. On the flip side, you have fractional investors, people that want to buy this token, this NFT. But now this NFT is backed by an actual physical asset that you can touch. So it provides you the best of the technology world, but also it hedges you against, a scam, like how a lot of NFT projects have been. But the technology itself,
or just tied to something in cyberspace.
Exactly. But yeah, if the network shuts down, yes, but then you can back it up and you can have those things in place as well.
No, my point is more like digital art,
for sure. Yeah.
What is it like? How's that
how
valuable?
Do you quantify it? Yeah, that's the problem.
What's the market
right?
for it? Versus a house in Southern Ontario, and
so again, like Akshat
there's
said,
a market for it.
There's definitely a market, and then also we want to be able to, if you're going after the younger generation who are into crypto and all these other assets, digital assets, we want to be able to talk the same language that they are able to understand. We don't want to go to them and be like, hey, this is the mortgage, this is the agreement you are signed, this is what you are getting, all that stuff. We can still do it. There's nothing wrong with it, but we don't want to reinvent the wheel. If it is already being invented by a different, the cryptocurrency, the digital asset, we're just building that together. There's real estate on this side. There's the digital tokens on the other hand. We are basically marrying them together, and we are basically telling people, hey, instead of putting your money on an asset and betting on it, why don't you do the same thing that you've been doing with crypto, but instead of just betting on it, why don't you take a calculated risk with us? You not only take appreciation, but there's also rental yield that will be paid out to you on a quarterly basis or whatever that we get to that point. And nowadays, if you look at a lot of these crypto projects that are coming up, even I saw a project a couple of days ago where they basically, the concept is you initially buy into these currencies, the digital tokens, and they want you to hold because more people hold this particular the token, the value goes up because of supply and demand. Again, just like how it is with real estate. More people holding and don't want to sell their assets, so there's less supply on the market, so the value for each token goes up. But now that there's nothing backing it up. It's just that me buying a digital token and just keeping it up just because it's going to go up. It's just manipulation of the market, unless there's a real utility to it. With our case, what we are doing is it's a house. You're buying a house, and we are going to keep it without selling it, and so can you. If you want to sell, that's completely fine, but you will be losing out on the entire appreciation that we would be benefiting out of when we sell the house, but you will still be able to benefit it partially. There's nothing like that right now. You can't benefit partially out of appreciation. Either you buy or sell, right? What we are creating is that platform where you can buy into whenever you want, you can sell whenever you want, and at the same time, if you hold it for a longer period of time, you're going to get more appreciation, and also you're going to get rental yield that's going to be paid out to you. So it's a simple system that the younger generation is aware of, and the real estate market not so much. We're bringing two together so that now you can invest in real estate without actually having to gain more knowledge. But this will make them research more into real estate.
Get off of zero.
Exactly.
Right.
Exactly.
Have something so you at least.
Exactly.
you need an easier starting point than buying $1 million house.
Yeah, exactly.
I'm in this business, so I understand how hard it is to get someone off of from zero to $1 million investment property.
Exactly.
Sorry, you mentioned yield paid for people who are holding tokens. Is that paid in cash? Is that paid in more tokens?
So that's something we're working on. It probably would be paid in cryptocurrency. We can use stable coins, which are basically like, let's say USDT is pegged with a USD dollar. So people get digital currency like that. So it's
and they can immediately flip it to cash if they want to.
Yeah, to fiat, they can flip it anytime.
They can flip or they can.
Yeah, I'm joking. We all need cash in our lives.
Yeah.
No one's taking my USDT when I go buy lunch for buying shawarma.
The beautiful piece about having USDT or digital tokens that's pegged to a dollar is now you can do whatever you want, right? You can buy more units in the same house
and go stake it.
There's so much utility to it.
You look at now daily.
People think we're nuts, though. There's gonna be a couple people who think we're nuts.
Oh yeah,
and we're talking a foreign language.
Yeah.
So I have a few more questions, follow-on questions. How does someone exit their investment? So say I put up $1,000 to buy tokens. I put up $1,000 of fiat to buy tokens. Yeah. How do I exit my investment?
So currently we have a 1-year hold period, just so that we get the demand and supply side, getting to a point where we can do the buy sell. For now, what we're doing is, let's say Rishard holds a token for 12 months. He wants to give it back. He wants to make the appreciation. He just, messages the company. We give him the money or the digital currency with appreciation back to his wallet account that's connected with the RealMe's account. So he gets it back, let's say, in 24 hours.
And is there going to be a limit on how many people can redeem?
Again, right now we are saying a 1-year hold period, and the thing is, we have a limit on how much you can invest. Let's say you can invest 100K, 200K on a 500K property, because then when you look at the governance piece, you hold the most value then, right? Yeah. We want to make it truly decentralized where people actually have the voting power. Right. They feel empowered. Let's say, our limit is 5K. Again, that's something we're deciding on and working on as we...
Addy's is 15K, I just checked.
Yeah.
15, okay.
That's the maximum.
1,500, right?
1,500.
1,500, yeah.
Yeah, so I think that's the piece where we say, okay,
yeah, sorry, I said that wrong. Not 15K. 1,500. Yes, 1,500 is the maximum for Addy.
Let's say our limit is 5,000. So when you invest 5,000 and you want that money back, it's easier for us to, go to our wallet or our own fund and just give it back to you. Right. But rather than someone investing 100 grand, you can't just have that in the whole thing. But now when you make that system and you have people buying and selling, we don't even need to be involved. We truly become a platform. You want to sell your token, someone else can buy it at an appreciated price and they can hold it.
Right. Yeah. So I foresee it wouldn't be the most liquid thing, and the bid ask would probably be pretty wide on it. It's not like you guys have market makers for this.
No, I mean, like I said, he's gonna, it'll take a while to get to that point where it's actually, tradable, on a day-to-day basis, right? But up until that point where there's, enough users and the platform, big enough, you're kind of be stuck in it. But the end goal is to make it like, basically simple for real estate.
Right. Any like structured exits, for example, like in 5 years we're going to sell it no matter what type thing, or
nothing yet.
Or we're going to refi it.
It's refi.
That's all the decision of the folks that own the tokens, because we let them decide, because it's their money.
So it's like a DAO.
Exactly. I mean, that's where we want to get into, right? Basically making everything decentralized, right?
The first couple of properties, people like Mo's going to make the decisions.
Yeah.
But once we get to that point where we have enough users being able to make that decision with still some expertise from people like Mo, we don't want them just going crazy, clicking a button, yes. Let's sell this property tomorrow.
Let's be trigger happy, right?
And like I said back.
So this isn't quick money, right?
No.
Hopefully we need to understand that. This is still.
I mean, if we had if we have a market run like we did back in late January, early February, that's where it could get exciting, and everybody could decide, okay, you know what, the 51% want to sell, and the other one wants to hold, right? But the 51% that sold would have been right, this time around, right? Especially with the incremental dip, right? So,
which is again, people need to get off zero.
Yeah.
And if you can afford to buy your own property, you should probably buy your own property.
Yeah.
And make your own decisions.
100%.
Of course.
Yeah, but that's it's likely not going to be the case, right?
That's not the target investor for this.
Yeah, I mean,
And I'll just give a quick example. I've been criticized for not doing RESPs, right? Because it's not too much. I have too much going on in my life. I don't have the time for it. Right, my kids already each own a house, so
yeah,
they're doing all right.
Yeah,
That makes sense.
yeah. RSPs, like a lot of that stuff is, for the working individual 9 to 5. It's set up for them.
Yeah.
And
well, RESP is so much smaller than RSP.
Yeah.
Right? It's so small.
At least it's something, better than nothing, right?
Yeah.
But I mean, if you know what you're doing, you're just gonna do other things.
Really cool. And can you share what your criteria is for an investment property?
We don't really have a criteria, whatever the deal is. So I mean,
Right.
same as like, your realtor, your realty taking investors around and showing them places. It's just a matter of what works. Obviously, cash flow and future appreciation come into, they're probably the top two things,
And,
right?
to Mo's point, right? That's where we looked at Kirkland Lake and Peterborough, because you're looking at a cap rate of at least 7 to 8%. So now you can give some rental yield back to the folks, because if you buy something in Toronto, it's maybe 1%.
Yeah. I'll just give you my credit card so you can take money from me each month, and
Yeah,
I
exactly.
don't know how you're gonna make it work. Unless you buy cash. So sorry, these properties that you mentioned, like in Peterborough and Kirkland Lake, there's mortgages on them?
Right now, it's all cash. Because basically you got to move.
Because how else are you gonna get who's gonna qualify for the mortgage?
Exactly. So once you kind of prove the model, get into the market,
All right.
then you can look into getting some private funds involved, right? Like I know the pension plan does a lot of investing in real estate. So getting folks like this behind you so that they can fund your operations, maybe work with banks on the commercial side, right? Where we can get some money that's asset backed. So we can get say 80% in loan, 70% in loan. The 30% could be people's money put in.
Mm-hmm.
So appreciation could be leveraged as well over time.
And then the structure and the regulation for this investment, does it fall under Securities Commission?
So right now,
LPs?
if there's again, we are looking at a LP structure, but if you look into, let's say, a token versus a security, right? There's 4 criterias. So again, we're working through the legal side. We have some partners, but if we use tokenization, it doesn't fall under securities.
For now.
Exactly. And we look at some of these companies in the US doing it for, I think, the last 2 years and getting over 100K users. And there's no, rules or regulations, because you're basically getting smaller amount of money. You're not getting 100K from a non-eligible investor. You're maybe getting 5K from that person. So the limit itself is very small per individual. And if you're tokenizing it and the transaction that happens is done through digital currency to a token. So a security has to be a cash input. So if you can change that, it currently, as of today, it doesn't fall under that.
I can imagine how long things will take if the government gets involved with securitization.
And at the same time, if you really think about it also, like if we are truly a platform, at the end of the day, we are not selling securities, like looking at the concept of it. Right now, currently, you see 4 people, 5 people getting together and buying a house, and they don't have to go through XM market dealer or trying to understand if they're accredited, non-accredited. When you're putting, let's say, me and Moe and Akshat, and let's say 4 of us decide to buy a house together, put let's say out of the 20% that we are going to put, let's say each of us take 5%, and 5% means 50,000 or 100,000, doesn't really matter. No one's gonna check if you're an accredited, non-accredited, whatnot, but you are still able to do it, and it's completely legal. And what we are trying to do is the same thing. We are trying to bring, instead of 4 people, we are trying to maybe bring 100 people together per property. We are trying to bring 200 people per property. We are basically bringing them together to buy that entire property. So we are truly becoming a platform, a middleman, to actually provide, hey, these are some great opportunities for you guys to invest. And on the other hand, we are bringing people, hey, here's how you can invest using tokens. And we are bringing 2 together, and then now it's a close community for that house. For let's say for a house that we have in Kirkland Lake, let's say we get 200 investors through this platform. So it's 200 people closed in a loop with that house. They're married to the house. Now they make whatever the decisions later on to do whatever they want with the house. So it's exactly how we would own a house with 4 of us, it's now with 100 people with the medium to do that communication. 4 of us, we can make easy decisions, right? Right now, let's say Mo wants to paint the house. We all agree we paint the house. But when it is 100 people, you can't necessarily do it the older way. You need a platform to make that decision. You need a structure. That is what we are bringing in through our platform as well.
Yeah. I look forward to when this all works, because
Yeah.
I might want some early exits on some of my properties while maintaining a lot of ownership.
Exactly. And I mean, it would be no different than, buying a stock and getting something in the mail, like a proxy vote or whatever, but where, they expect you to chime in and, it may not matter depending on, who the major shareholders are, but, the term we've bandied about is democratization. So I mean that's how we're going to look at it. And small investors, in that $1,000-$2,000 range, there's no way you can get in the market. There's nothing you can do. You can't even pay legal fees with that now, right? So I mean to get a piece, real estate and consider yourself a real estate investor might be the only way to do it.
All right. Could I ever use like RealMe and offer up 49% of one of my real estate properties?
That's something we looked at. It's difficult because you probably have to put in a property in a LLC, like if you are going in the States, and then putting that LLC in a smart contract so that people can buy in. So it's hard to do fractional. We looked into it, maybe in the future, because it opens up your my equity and gives you cash right away.
Yeah. Exactly. So like Akshat said, we wanted to start from that initially because we always believe in technology, and we again, Mo is a great guy when it comes to real estate, making those decisions. But at the same time, let's say for us to scale up, right? Like we can be going around trying to find properties every day. Let's say we grow into a...
You don't have to go every day. I have property. You have 49% of some of them.
Right. So that's why we want to get into the place. Even in our case example, we got a house and I wanted to if I can, sell a portion of it and liquidate that. But I had to sell my entire property because that's the only way to get out of the investment. So we looked at, for us to become truly a platform and to be able to scale this up, we need to really become the platform that connects the two sides. Right now, we are doing this part right now, buying properties and doing all that, but we want to get to a point, there's technology, let's say you want to put your property down, we do the evaluation using all of the algorithm that's involved. We say, hey, this is the price that we can offer you for this many shares. And of course, mitigating the risk at that point as well. And then getting to that point where you can still own 51%, 49% goes in here, they own 49%. And when you get to that point, again, this is very long term, but again, that is sort of the direction that we would love to go forward.
Yeah, and I recently picked up a triplex, and we were going to throw it on the platform, and I was going to do exactly what you're saying, but I think there is a huge market out there for that, because I mean, what you're suggesting is, I can avoid going to the bank and doing a refi and giving them all that information. I can just go to this platform, raise the money, have it on there, right?
Have a joint venture partner.
Yeah,
a silent joint venture partner.
Exactly. And so I mean, but in that instance, then you would have people that own these properties and decide, okay, something happens in their personal life, they need to sell that property. Like, what's the exit strategy there? Are more investors going to take the house out, or is going to have to basically make everybody whole that invested, plus whatever appreciation they have, and then take the unit back? So it gets a little bit complicated. That's why we're just doing it in-house for now. And then later, as it, grows out, then we can see what kind of model there is for that.
Because in that model, it's very hard to leverage that as well. If I'm taking, say, 40%, I'm giving you 40% cash. Now, appreciation, how does that work? Do I get 40% of your returns, or do I get 40% of just the appreciation, right? It gets tricky, and we actually, did a couple of test runs. And I mean, we still made money for some of our family and friends that put in money within our first 2-3 properties that we didn't launch. We just did test runs on. It made sense, but it's just that aspect of real estate has always done well with leveraging, right? And in this case, maybe there's a way we can do both so that homeowner is happy because it's easy for them, and then the fractional investor is happy as well.
So we mentioned stocks and shares a couple times, and one of the things that shareholders don't like is share dilution. So how do you control how many tokens are issued for a property?
Each property will have a finite amount of tokens that are issued on day one. So the tokens can increase or decrease, because on a smart chain, it's a contract you're writing. So once a contract's written, you can't change it. So it's, you can't say if it's just a corporation, we can just issue more shares. But on a actual blockchain, you cannot. So the people that get the tokens, there's no more tokens that are made by us. But what we can do is these people can buy and sell within a platform, again, long term.
Right, but those are the same tokens. These aren't new tokens.
These are not.
Yeah, exactly. Imagine now, once we get to the point where we have that many users, but finite tokens, now you have that marketplace to buy and sell whenever you want.
Right.
That's
now you have
exactly
NFTs and they're finite.
Exactly.
Yeah. Well, that's the way it should be.
Bitcoin's finite, right?
Slowly becoming finite,
Yeah, there's I think 2 million left to be mined. But then I think this crazy number 3 million has been lost by people.
Yeah.
Who knows how much was lost?
Yeah.
And how many people will refuse to sell it no matter what?
Yeah.
Right.
I lost some, about $100 worth. I lost the seed phrase.
It's worth $100 today, or
no,
worth
it's
$100
probably worth.
then?
It's probably worth about $300-400 now. But I mean, I contacted Coinbase, and
Coinbase.
I even told Coinbase, you know what? I don't want it. Just at least give it to charity. They wouldn't even do that.
They can't.
Like, no.
They can't access
can't
it.
do
It's
it.
gone.
They can't access it. Yeah, that's
So just in the ether, just sitting there. It'll. I stopped looking at it because who knows? It could be $1,000 now, right?
Such a weird, crazy thing.
Yeah.
I had a friend who lost a bunch. They went to see a hypnotherapist to see if they could figure out his password. Didn't work out.
Oh, jeez.
That's crazy.
Yeah.
Went to a therapist?
Hypnotherapist.
Oh, okay.
There's the guy from.
To try to remember his password.
I was reading a story. Some guy from 2010, 2011 in England. He bought pizza with a bunch, and he had a bunch in his wallet.
Oops.
And his girlfriend threw away the drive that had the password, and he's still fighting with city. It's somewhere in England to dig up the landfill because it's worth $500 million or something crazy, and but they won't let him touch it.
It's gone. How are you gonna find it too?
Well, he's got all this stuff figured out.
Oh yeah, he had people that would help him find it for a piece. Yeah.
So funny piece is I remember my password, but I did invest. So it was all at that point when I was in undergrad, doing my undergrad. This was back in 2015, 14, I think. I wanted to test out, so I put I think I put $1 or $2, and it's now I was able to log in a few days ago. It's $1, $2 is I think it was close to $20 whatnot. So I'm like, only if I had put maybe 100,000 or 10,000, forget about 100,000. I'm like, geez, I actually tried it out, but of course didn't keep track of that. But
fascinating. Well, gentlemen, this is fascinating stuff. I wish you all the best. How can people follow along your journey?
So we have a landing page on realmeproperty.ca so they can join the wait list. So for the first 10,000 people, we're going to be launching our MVP, like our minimal viable product platform, so that they can, get into the first 2 investments. So that should be going live in the next 30 days. But, they should be able to sign up on realmeproperty.ca through their email. And once our platform's live, at least for MVP use, they'll be the first ones to use it.
Yeah, and then they can also follow us on all social media, TikTok, Instagram, and Facebook as well, RealMe Property and RealMe.
What are you guys putting on TikTok?
Right now on TikTok is more the education side, right? Telling people, but I think...
How long are the videos?
15 seconds. Okay. 20. It's like, you're giving them the quick glimpse.
I'm going to test Moe. 30 years and 15 seconds when we're done recording. You're gonna dance. You're gonna dance while you're doing it too.
The social media part is taken care of by some social media experts. We'll call them younger people than us, right? So, our company kwproperty.com. You can find us if you're looking for a place to rent or you're looking for management. We have landlord forums, tenant forums, and Instagram, Facebook, TikTok. We have KW Property has accounts, and you can engage with us there as well. And whatever you need, like I said, 75 to 100 kilometer radius, we can manage your investments. And the one thing that really separates us from everybody else is because of all our foreign clients, we do not touch the money that we don't touch the client's rent. So the majority of property managers take the rent, take your cut, give you the difference. Problem with that is embezzlement, fraud, misappropriation of funds. I believe there's a property manager in Waterloo who stole about $500,000 being charged right now. So that was in the paper. And we have some clients that have anywhere between like 20, 30, up to 120 grand stolen from property managers. So that being said, our system is different than everybody else's. And the rent goes from the tenant's account, goes to the client's account. We bill you separately. You can even pay us by credit card if you collect air miles. We make it really hands-off, software focused, and we can scale. So if you're a landlord and you're looking for a good property management company, we have the ability to take you on.
Mm-hmm. And then the real estate market going to collapse?
No.
What do you mean?
No. I said no. No. I just, I mean, like I said, it's the sky is always falling, right? And if you listen to these people, they'll tell you, right? Stop watching the news. Basically, turn off Fox, turn off CNN, and
read a book.
Yeah, exactly.
Read a good book.
You want to know how you gauge the market or news? Look at stocks, see how they do, and then you'll figure out what I mean. I've been reading about I've been reading about what was it? Like food shortages, and then there's going to be a shortage on fertilizer in Russia, etc. And I always tend to go back to the market, and I look at McDonald's, I look at Weston's, and those stocks just keep climbing. So that tells me that the analysts and people following those things, which are huge institutions, aren't worried. Then I'm not worried, right? And those are multi-billion-dollar corporations, and
costs are just a new high.
Yeah, exactly. So I mean, you follow the big money, and that truly is big money, and you can base your decisions on that, right? So that's basically it. So thanks for having us on. Appreciate it.
Thank you. No, thanks for coming in. This is fascinating stuff. You guys are the bailiffs out of these problems.
Yeah.
Any final words? Any final words?
No, I think you can get in touch with us using our website, and of course we are always looking for ways to improve, test, and
100%
new people to join our team as well as we grow. So get in touch with us if you want to change the real estate game. Join us today.
Hey, I offered my property 49%.
There you go.
Yeah.
All right. Thank you, gentlemen.
Thank you.
Thank you
again.
so much, guys.
Thank you for listening. If you want to learn how to invest in real estate from scratch, my team teaches beginners how to use the #1 investment strategy in a virtual free training class every month. Go to investortraining.ca/podcast to register for our next class. I publish an episode here every week, so subscribe if you want to keep learning from seasoned investors like myself and my guests. Again, if you're ready to learn the nitty-gritty about real estate investing, register for our next free virtual training class at investortraining.ca/podcast. Again, thanks for listening to the show. Talk to you next week.